back to the Precious Metal Summit here in Zurich. I'm here with the CEO of Barton Gold, Alexander. Pleasure to meet you here in person and talk about what appears to be a future gold mine coming online in a couple of years. So let's talk about what this project is about, because there's multiple angles to it. There's some very interesting potential to grow this asset in stages and so on. So let's kind of first talk about the positioning of where you're at. You're in southern Australia, a very exciting gold area in the history of Australian gold rush. So if you can give us a little bit of a background on where this project's located.
Correct, yeah. So we are based right in the center of South Australia. So this is the Central Gawler Craton, obviously a very well-known geological district. And on the sort of the eastern center portion, that's where BHP has its IOCG province that it's just consolidated. Just to the west of that, there's an historical gold province, and this gold province has produced high-grade gold for about 130 years. We've pretty much consolidated every significant historical asset. We own the only gold mill in the region. We've built up a 1.3 million ounce resource base, and as you noted, our plan is to keep growing that and then bring these assets on in sort of a staged, lower risk, lower cost method of development with the objective to be producing 150,000 ounces per annum.
So how do you get to the 150,000 ounces? You said you'll do this in stages. How does that look like?
Correct. So we're focused on open pit mineralization, and we really have two projects that sit side by side. So they're really kind of one if you think about them operating in tandem. But we have the ability to separate them as well, because one of them is closer to our existing mill, and it has processed its material through our mill before. On that project, we have an existing open pit mine that has high-grade extensions. And then near that, we're mapping out essentially the architecture of the local geology where we think we can create multiple high-grade pits. So the idea here is we only need to put together a relatively small amount of resource to then restart our mill, and we're using fully permitted mining leases, fully licensed mill, proven logistics and infrastructure and metallurgy, and that allows us to take that step into operations on a low-cost, low-risk basis where you can have high-margin ounces because we don't need to pay back a mill. Once you've done that, obviously, then we've got a re-rating from, explorer developer to producer. We are operating, we're generating cash flow, and then we can expand into our larger scale asset. And that's where we're then looking at big bulk open pit mineralization. And then we can fund a second mill there, and then essentially go from that 30 to 50,000 ounces per annum up to 150,000. But the magic of all of this, if we pull this off, is we can go into stage one operations without a big capital raise because we don't need to build a mill. And then if we can mostly self-fund that second step, our shareholders who are with us today get to participate in owning the majority of that story.
So you're really focused on the shareholder and like you just said, reducing risk, building this in stages off of cash flow. This is a quite unique story because you've already got, you said, fully permitted, you've got a mill in place, so it really isn't that long, it wouldn't take that long to start this initial production.
Yeah, correct. I mean, for us, the point at which we want to push go, if you will, or exercise the option to start that mill, we want to make sure that we're building optionality between all these assets, and you always want your option to be deeply in the money before you exercise it, right? So we are just going to build up a 2 or 3 year runway of higher grade material, and then we can restart that mill in the knowledge that it will process smoothly, while we are then advancing the larger scale asset into development and operations.
So you are going to be processing this material from near surface. This would be an open pit situation. So give us a little bit of an idea of how this open pit would be developed. How is the mineralization distributed?
So we actually have an existing open pit, and on that pit, it's quite shallow. So this pit was producing between 3 and 4 gram per ton in terms of mineralization to our mill during 2017 and 2018. But the historical owners there were starting with a surface where there was a lot of historical high-grade mining, and they just dug around an historical mine shaft. So the pit is only 70 meters deep, and the structure that fed that pit continues to depth. We're currently going to be drilling that just to map immediate mineral extensions in the pit floor. So the idea is something that we could mine without having to make the pit any bigger. But we have also, behind the southern pit wall, we've identified an entirely new high-grade gold zone. So you could go deeper and then just extend the pit without having to actually, make it bigger. So these, any ounces there are really high-value ounces, and then we're looking to replicate that. So these are ounces that would have, between 0 and 2 meters of cover, and you're directly into high-grade ounces in a couple of these targets.
So it's a pretty simple, straightforward approach to getting this into a cash flow position. You said you'll build this up to 150,000 ounces a year. So you have a kind of also unique position with this mill. You can also process some existing stockpiles that you have there. You mentioned. Or?
Correct. Yeah. So we kind of surprised the market a little bit already. We were looking at how we would optimize the front end of the mill and the gravity circuit, and so we actually started disassembling part of the mill, and we identified that there's quite a bit of gold trapped in the gravity circuit. So last December we did a mill clean out. In April before we had done a gold room clean out, but we've taken about $4 million US worth of gold out of just the gold circuit between the cyclones at the top of the gravity circuit and the gold room. And so now what we're looking at is, even if we think about a stage 1 restart of full-scale mining operations, there might even be another intermediate step for us where we just restart the front end of the mill, the crushing and the grinding circuit, and then concentrate material. And we have some stockpiles sitting next to our mill. So we have around 100 to 150,000 ton of stockpiles. And this is lower grade material, but anything that's 1 to 1.5 gram sitting next to your mill is like 3 gram in the ground. So we are looking right now, actually we're doing metallurgical testing right now to see if during 2024 we could actually turn the front end of the mill on and process, even 5 to 10,000 ounces. That is more cash that we can generate internally and don't need to go back to the market and dilute.
And you haven't really had to go to the market to dilute. You've been around for a few years now, the company.
Correct, yeah. So we IPO'd 2.5 years ago, so on the 28th of June 2021, so almost exactly 2.5 years. We did a 15 million Australian dollar IPO at the time, and at the middle of this year, in June of this year, almost 2 years exactly after, we still had around $10 million, and that was because we have generated about $10 million of internal capital. So we've been investing very heavily, but also generating capital, monetizing our assets. So we lease our camps out, we do careful cleanouts of mills, we dispose of surplus equipment that we'll never need. But the result of this has been that we've had a little bit of dilution because we had a number of institutional investors say, we really like the discipline, can we become a part of the story? But the number of shares that we have now versus the number of shares we had at IPO, we've only had 5% dilution in that time, and that was only to bring very value-add investors into our register, as opposed to kind of these deeply dilutive raisings every 6 months.
As I go through this conference, almost every company is looking for capital. It's very difficult, but in your situation, you have institutions who want to give you money. So that's, I got to say, that's quite unique. So it really represents, it speaks to the approach that you're taking, and I really like that you just said you're looking for ways to generate cash from your existing assets. So you're really focused on the shareholder here. I imagine the market will start rewarding this as you further progress towards production. But what are the valuations look like right now?
So right now we're valued at about $45 million Australian in terms of our market cap. So in US dollar terms, about 30. And our enterprise value is in the mid-30s in Australian dollar terms or mid-20s US dollar terms. So obviously, like everybody, we believe we're a strong value proposition, but we've got $150, $200 million worth of established infrastructure. We have 1.3 million ounces. We have kind of real progress, real pace. And I think one of the really important things I'm careful to emphasize is we have a very strong team that's got probably 200 years, just in our leadership team, 200 years of experience discovering and commercializing mineralization with a very strong pedigree in South Australia and gold. So probably half of my leadership team are ex-Normandy and Newmont. So, we're all professional investors and asset managers, and we're quite serious about this, and we own 25% of the company approximately, so we're quite aligned to defending the shareholders' interests.
Always one of the top things I look for as an investor. That's fantastic. You're continuing to do exploration work and develop value also through adding more ounces. What's the exploration program, and what are you looking at doing right now?
So we had a resource upgrade in April of 2023. We added around 190,000 ounces to our main sort of stage 2 large-scale project. We did that very efficiently. So that was about $12 Australian per ounce on an all-in basis. We have followed that up very aggressively. So in September, we started about a 20,000 meter drilling program. We're almost done with that, and we're targeting both extensions of that deposit again, but also testing 3 new gold zones around it to see if we can extend that cornerstone deposit and then create actually new resources. So we've broken that into 2 work streams. We've accelerated the assays for the cornerstone deposit. We're aiming to have a resource update for that as soon as December. And then with the balance of the results, hopefully have another resource update in potentially as early as March. The idea would be that hopefully we're targeting 3 resource updates in a 12-month period for this project. And by the time that's all done, we'll be back in field drilling again. So it's kind of non-stop action and growth for us.
Lots of work going on, a lot of milestones coming up. One last thing, this Australian exploration producers, gold producers, not really accessible to U.S. investors, but I noticed that you actually have a U.S. symbol listing. So
we do, yeah.
How do investors in the U.S. who actually never really have opportunities to get into Australian mining companies, what were you trading and a little bit of information on how to learn more about the company?
Yeah, look, I mean, for us, we're pretty open book in terms of information. If we sort of take this back to front, if you go to our website, bartongold.com.au, we have a very extensive investor and media page. So part of the problem with investing in Australia from North America is, the tyranny of distance. And then even though everything's digitally connected, it feels very far. But it's hard to see these assets. It's hard to be familiar. So we actually have a lot of video that shows just how open and accessible our ground is. And then, we spent a lot of time engaging with investors in North America before we opened a North American listing. And we got a lot of feedback that was basically saying, this is a really interesting story. It stands out amongst what we're seeing here, but, my full service broker doesn't offer ASX securities because it's too hard. Or, on the ASX, your typical stock is a penny stock, right? It's the typical IPO price is 20 or 25 cents. So we don't allow penny stocks in our brokerage. So we went and actually opened an OTC QB listing in August, and we've just now gotten our registration with the Depository Trust and Clearing Corporation. So this allows all full service brokers to hold our U.S. securities. So we trade on the OTC QB as BGDFF, and that's basically the same class of security as our home listed ASX securities. So North American investors can trade during U.S. market hours in U.S. dollars. They call their broker, they place a trade, and then the market maker, will make that trade overnight for them at the price they've set.
Fantastic. So that's pretty unique for an American investor to have easy accessibility to an Australian gold asset.
Yeah.
Quite an interesting story, quite unique. It's the first time I'm hearing about it. I'm finding that it to be quite a unique story from what I've heard, and I really love the approach that you're taking. It really shows that you're focused on returning capital back to the shareholders and minimizing the dilution and all the other things that in the end that can affect the shareholders' performance. And in this case, I can really see that you're really focused on performing for the shareholders. So I really love hearing this story, and I really love the approach. So thank you for giving us some insights and for your time.
Well, thank you.